Hi guys, welcome to our PPAP channel. So basically, the topic of this video is about the current development of management accounting. So in this video, I will interview 4 different persons from 4 different companies to answer my 4 different area question of the topic, which is first, the development of the management accounting. Second, the change in roles of management accountant. Third, the contemporary management accounting tool. And last one, the change in the business environment. So don't talk too many grandmother story and let us straight away to the point. Welcome to our PPAP channel. Today we are highly appreciate to invite Mr. Kelvin come from the Blow Water Company to join our interview session. So today our topic is talk about the current development of management accounting. So Mr. Kelvin, can you let us know more about the changes of business environment?
Sure. So when we talk about the changes in business environment, it's like the traditional business environment and also come with the current business environment. So in traditional business environment, we can take one example like technology. So in the traditional business environment, we mostly use the manpower to operate our business and also our production. And this one we know that it will take some time for the production, but now because of the technology transform, update and rapidly, so we can use the machine power to replace our manpower. We can done a production in a very efficiency in a short time period to done our production. So when we talk about the changes in the business environment, in some of the factors that we can take into account, like the related strategies, business strategies, the business environment that which the market condition, and also come with the economy and the customer needs, future economy and the future opportunity for the business, and other some of the related. But in my opinion, this is part of the important factors that the business have to take into account. So like we talk about 3 examples first. Firstly, the technology is very important for the changes in the business environment, because we have to compare the traditional and the current business environment. Like as I mentioned just now, the traditional business we are using the manpower and also versus the machine power. So even though we now we are using mostly production, we are using the machine power, but part of the machine power we also have to plug in some suitable manpower to control the machine power. So we cannot just ignore the manpower in our current production. And then come with the communication technology. In previous, we are using the letter to translate and transform our message from one way to so now it's the email technology, email century. So the second is the customer needs, because in our research and study, the customer need is not a fixed, will not always fix in the certain level. It will changing by the market demand and also their income of the customer. So as a businessman, we have to study on that, the customer needs, because it's not always the fix. So it's a problem that in line with the changing in our business environment. So as a businessman, we have to achieve the business needs. And lastly, come with the business strategy, because of some of the business are using the same strategy, like previously, maybe one business create a new business strategy for them to operate their business, and other business see that the strategy is very successful, so they are copying or following the business strategy. And like assume that all the market all the business is using the same business strategy, is not cannot differentiate which is the winner and loser. So business strategy have to keep changing, also in line with the changes in business environment. So the business have to create some new business environment to achieve their to in line with the business changing environment, like compare differentiate what is the traditional business environment using and now the current market condition, current market environment using. So this one is also related to the management accounting, what strategy have to use to in our production. So
Wow, what's a nice explanation from Mr. Kelvin. So we are going to invite another person. Hey, the pretty beside me is Miss Daddy. She's come from Rubbish Bin Sdn Bhd. In this interview section, she will talk about the evolution of management accounting.
Okay, general management accounting is defined as a process of identification, measurement, interpretation, and communication of information and data that is useful to managers to plan, control, and evaluate their action within an organization. The traditional role of the management accountant has been to exercise control, and for this reason, they have been largely independent of the operational managers. More recently, management accounting has focused more on business support. According to Burn and Skeppen, there are three main reasons for the change in the management accounting role, which is the change in technology, the change in management structures, and the change in the level of competition. Nevertheless, the core purpose of facilitating decision-making for planning, control, evaluation, and communication within organization remains. The following will describe how management accounting developed since the 20th century. First of all, stage 1 of management accounting is before year 1950. Management accounting in this stage was considered in its original form, where technical activities that were required to keep track of business were the only component of management accounting. At this stage, there were less competition and fewer challenges in the form of regulation and more. Besides, products were easier to sell and little innovation was required. Therefore, people focused on cost effectiveness and productivity. Then, the second stage of management accounting is between the year 1950 and 1965. In the second stage of management accounting development, the concept developed to involve more than just technical costing activity. By this time, it has included planning and controlling activities. In other words, management control were limited in manufacturing and administration rather than thinking about strategic direction. Hence, management accounting remained reactive. Next, the third stage is between the year 1965 and 1985, what was noted to represent a significant change in the practice of management accounting. Corporate leaders and managers are joined in common interest to reduce waste in corporate processes by making the most effective and efficient decisions. And this significantly enhanced the need for a better management accounting techniques and practice. The management accounting department can no longer afford to become reactive and passive. Aggressive cost reduction and efficiency management performed by many companies drive management accountants to be sharpened and more creative in providing information that will support managers in decision making. The last stage in stage 4, which occurs between the year 1985 and 1995. In this stage, the development of management accounting was boosted mainly by the presence of new computer and communication technology like the World Wide Web and e-commerce such as email. Since then, Management accounting professionals have been struggling to increase value generation by providing better information for management team who are already having a clearer strategic focus.
Alright, thank you, Miss Sally. So now we have another person to join our interview section. Now we have Miss Lee from the Chinchay Sandhya Berhad to talk about the changes in the roles of management accountant.
Okay, so basically, management accountant is a profession that involves partnering in management decision making, devising planning and performance management system, and providing expertise in financial reporting in order to assist management in the implementation of an organization structure. Management accountant, regardless private or public sector, are closely involved in supporting, planning, controlling, directing, communicating, and coordinating the organization structure activity. Traditionally, management accountant is the person who gather, interpret, and present financial information to people within the organizations. The weather role of management accountants are to be information provider for both management and staff level and the participant in the planning and control activity. However, nowadays, much of management accountant roles have shifted towards supporting the manager decision and participating the information needs, acting as the organization internal business consultant and involving in the multi-functional team. They also lead the business strategy agenda and make strategy plans for the future business. Management accountants in this 21st century are no longer a traditional beans counter, but now has become a strategy partner and value creator. Management accountants currently are regarded as value creations in this business environment, which is different from professional role of external financial reporting, which means that financial reporting is very critical in every business, but making the $1 billion is much more difficult than reporting the $1 billion. Hence, a value creator role is seen as a much broader role than just external reporting. So, management accountants these days are required to become uniquely real partner who can lead the business to greater success. Management accountants must look at how they can help in assist in adding the organization value and participating in the managing decision rather than playing the traditional role of number crunching and bean counting tax.
Thank you, Miss Lee. So we have the last interviewee, which is Mr. Siu from GG Sandhya Berhad. So let's go. Okay, so this is our last interviewee, Mr. Siu from GG Sandhya Berhad. According to the changes in management accounting, so what is the contemporary management tools that you can suggest to us?
Contemporary management accounting tools are very much helpful to organizations in order to survive in the long run. Most of the large and small manufacturing industry are most concerned about their decision making, which purely based on profit and cost incurred. Management accounting is very much backbone of the manufacturing business, irrespective of its size or the volume. Management accounting, it has been changed since then as per changing business environment. there are various temporary management accounting tools such as total quality management. Total quality management has been originally known for continuous effort to reduce the cost of the organization. It is technology which has been evaluated, and now it has become one of the important part of the development of the quality control within the manufacturing. It's helped the manufacturing company to create a high quality products with low cost. The TQM has made the management to resolve the quality issue like manufacturing defect, machine error, and slow run of machine. One of the major benefits of TQM is strengthens the competitive position of the company by reduce the waste and increasing the consistency within the productive. It increased the higher productivity by using TQM. Company can reduce the waste and bring quality environment along the company has been bring custom product. Next is value chain analysis. Is another most important technique of analyzing of the actual cost of production. Value chain analysis is based value given at each and every stage of production or processing, starting from the procurement of finished product. One of the major benefits of chain analysis play important roles in developing the high value for the customer in business. The tool is used to analyze the activity, value, change, and evaluation and planning. Activity analysis is stage company needs to identify the activities, then help to produce the goods and service. Value analysis is adding value to each and every stage of production and make the products of great value. The evaluation and planning help evaluating the planning, assessing whether it is possible for changes and makes plan for an action. And the last is profitability analysis. Profitability analysis is based on the ratio. The ratio shows the company actual capacity and its growth rate. Profitability analysis company of various set of ratio that helps the company and investor to understand whether the company is being running profit or loss. Apart from the profitability analysis, help the company and management accountant to understand the actual ROI and operating profit by selling of product and service by the organization. This is one of the major tools which indicate the company actual cash flow and actual cash outflow. Profitability analysis based on the computing the own ratio with the same sector ratios in order to rationalize the actual financial position of the company in terms of industry and competitors. That's all.
Okay. Thank you for Mr. Siu. So, after the interview session, finally I have some idea about the topic. Nowadays, there are so many contemporary accounting tools such as value chain analysis, profitability analysis. Why there are so many management accounting keeps changing from previous until now? During the evaluation of management and also the changes in business environment, therefore it will be affect the rules of management accountant. So the management accounting tools will be more and more and more. So in the end, the 4 different areas will be affect each other. If you like our video, please click the like button, and if you have any question, ask my lecturer will be better. Thank you for watching, and I will see you in my next video. Annyeong!